You've seen the headlines: interest rates going up, forbearance ending, foreclosures may go up. Is the real estate market going to crash? Yo, relax. I give you 5 reasons why the real estate market is not going to crash and why it's still a good time to be in real estate. Stay tuned. Welcome back, everyone. My name is Robert Carrillo. I'm an associate broker and realtor with eXp Realty. At the top, I mentioned 5 reasons why we won't experience a real estate market crash. In order to do that, we have to understand the 5 main causes of an industry crash. We'll compare the two and see where real estate falls in line. Okay, so let's take a quick look at the 5 main causes of an industry crash, and then we'll compare them to what's happening in the real estate market. So first one is an item or service becomes obsolete. 2, demand for an item or service drops dramatically. 3, demand for an item or service was artificially generated. 4, supply of item or service increases dramatically. And then 5 is the demand for an item or service is impacted by outside market dynamics. All right, so now we're going to do a deeper dive on each one of these points and see if we can knock it out as a reason for why the real estate market is going to crash. Number 1 is an item or service becomes obsolete, right? If you look back to Blockbuster, prime example, they were the leaders in movies, movie rentals, decided not to buy Netflix, stayed with an outdated technology, and they went by the wayside. Real estate, in 2010, I'd say real estate was facing not a similar fate, but the demand for home ownership, just the value in home ownership was, I think, starting to decrease, right? People were thinking about saving money and using it to invest and travel instead of putting it into a home. People were looking to be a little more mobile and opting to rent, especially the younger generation, looking to rent instead of owning. Well, Unison's 2021 State of the American Homeowner National Survey tells us that post-pandemic value, people's look or worth in a home is a lot stronger than it's ever been. And so showing us that real estate or home ownership is not becoming obsolete. Like 64% of Americans say that living through a pandemic has made their home more important to them than ever before. 83% say that a home kept them safe during COVID-19. 91% say that they feel secure, stable, even successful owning a home. Okay, so real estate and home ownership is not becoming obsolete whatsoever, and these numbers show that. Okay, number 2, the demand for an item or service drops dramatically. Right? Unfortunately, the restaurant industry, because of the pandemic, faced a bad fate. But essentially, people couldn't go and they didn't want to go out to eat. So the real estate industry, so many restaurants have closed, completely gone out of business. The ones who've survived, barely surviving. So hopefully that industry comes back. But when we look at real estate, you look at the showing index over the last 5 Septembers. This is the index that tells you how many showings, house showings are requested, and this is through the Showing Time app. And you'll see 2017 through 2019 steady, about 111, right in that range. And those are normal good years. And 2020 through the roof, 2021 still through the roof, maybe a slight decrease from 2020, but we'll get into that. So the demand is still there. Definitely, more than ever before. Sales, non-seasonally adjusted in September of 2021, were lower, right? They were below those of 2020. So just looking at that alone, somebody may say, hey, the real estate market is going down. But excluding September 2020, when it was distorted by the delayed selling season, meaning people were cooped up, ready to go out, ready to buy, but the pandemic held them back. So as soon as the doors opened, the gates opened, there was a bum rush, right? So excluding last September, because of that super increase in demand, sales, non-seasonally adjusted, were the strongest since 2005, predating the last crash. All right. So again, minus this past September 2020, sales have never been stronger than since 2005. All right. And now we look, looking ahead again, you look at that first part and it says it's a slowdown, but looking forward towards the end of 2021, then 2022, you'll see the four major um, uh, national indices, Fannie Mae, Freddie Mac, and ARMBA, all see real estate sales or home sales continuing to increase. Look, it's 2020. In 2020, it was 6.5 million. We're going to surpass that in 2021 and in 2022. All right. So again, that main cause, demand is stronger than ever. So we don't have to worry about that in real estate. Number three, the demand for an item or service is artificially generated. And now, because we're in real estate, we can't even go back that long. Well, to the last crash, when the real estate values were hyperinflated by, unfortunately, lenders, brokers, appraisers, agents got in on the action. But essentially, prior to the crash, anyone could get a loan. You literally just had to have a post and you could probably get a loan. What you've seen since then, and you see this in the chart, is that the banking industry has gotten much tighter with their lending criteria, right? So they're first with their product, they got rid of junk type products. You'll see those secondary loans gone by the wayside as well. And then you'll also see that the consumer or the borrower risk is also decreased, especially over the past couple of years. And probably because, again, just making sure that who is applying is actually the one who is applying, making sure their credit is good, the finances, all of that. So it's much harder to get a bad loan, I think, nowadays than back in the day. And if we look at, you'll see, again, that borrower and product risk is decreasing still, and nothing compared to prior, during the bubble. This index here shows the higher the number is, the more likely the availability of funds to people, right? You'll see very, very high prior to the crash or leading up to the crash. And then nowadays it is super low. Okay, so it is difficult to get a loan. The requirements a little more stringent. That's all that means. And so you see this happening in real estate. The values, the demand, everything is real in real estate. It is not artificial. So that's the next one. All right. The supply of an item or service increases dramatically. And so again, the crash of 2008, a massive number of foreclosures, right? And so that led to an oversupply of houses on the market, right? And so if we look at the real estate market today, you'll see that the inventory, or the months of inventory of real estate, has decreased drastically, right? When the inventory is under 6 months, it is a seller's market. And so it's been a seller's market for a while now, but even now more than ever before. As you can see, inventory is at its lowest, about 3 months out. And so again, we don't have the foreclosures of 2008. So there isn't that oversupply. And I know forbearance is ending now. And so with that, people may think the number of foreclosures are going to increase. Now, this is one of my favorite parts about trying to get people into real estate, because there is still time to take advantage of real estate right now. And that is, right, we look at the number of foreclosures. I'm going to get into it. I'm going to tell you what it is. But first, if we look at the number of foreclosures from 2017, 18, and 19, look at those numbers, right? And those are good real estate years. Now, in 2020, that number dropped drastically. And then if you look at the first half of 2021, that number is at about 20,000, like ridiculously low. Now, of course, a lot of people avoided foreclosures possibly by going into forbearance. Right? Forbearance just means that you put on a pause on making payments, right? But you probably, depending on the situation, interest may still accrue. If you're lucky, it doesn't. but you still have to pay all of those months of missed payments at some point, right? But so that that could explain why there's such decrease, right? But I'm gonna get into why I think that number is gonna stay low. So these are in at the beginning of the pandemic, 4.76 million homes or mortgages were in active forbearance, right? Meaning they put a pause. It could have been because they lost a job, or maybe things just got tighter at home, or maybe just wanting to wait to see what happens after the pandemic before making a move or something, right? A lot of reasons why people may have gone into forbearance. But as you can see, that number, the people coming out of forbearance, is increasing, right? So that means that there are people coming out. So there are less forbearance cases. And if you look at it today, 1.24 million homes in forbearance. That means that in pretty much a little bit over a year, 3.5 million homes have come out of forbearance. And if we look at the prior chart, you'll see that even though that many have come out, we still don't have that many foreclosures. All right. And so here's I think the number one reason why I think we won't see as many foreclosures moving forward is because of equity. As real estate values have gone up over the past couple of years, and really several years, as real estate values have gone up, our equity is going up. But the super boost in equity that was received over the past year and a half basically makes it so that even if you um, let's say a year ago you stopped making payments, right? Chances are that your property has increased in value so much that that equity can pay or make up for the year's worth of missed payments. All right. So what we're looking at here, these are again 1.24 million homes in forbearance today. Only 7% have less than 10% equity in their homes, meaning you can refi, you can sell, and pull cash out and get cash out before you have to foreclose. All right. I like to think that 5% buffer is good enough. Even if I like to think that if you're at market value, you're good enough, right? Because you can sell. But if you've increased again your debt by forbearing, if you've got 10%, 5 to 10% equity or above, you should be able to pay that back. All right. So that's why I think that we won't see as many foreclosures. But let's assume that every single one of those households um, go into foreclosure. That's the 86,000 plus the 19,000 or so from the first half. That means that we'll have 106,000 foreclosures, right? Way, way lower than you see 2017, 18, and 19. So again, I do not see an oversupply of homes in the market. All right. And then the last one here is the demand for an item or service is impacted by outside market dynamics. Again, the Hummers. Everybody was in on Hummers. A lot of people, not everybody, right? Not the environmentally conscious folks, but big machines, big tanks. Then oil prices started going up, gas prices started going up, more of an awareness around impact on environment started going up. And those big tanks became mini tanks that they had like the H2s and then even smaller. And now, you know, those big cars, kind of went by the wayside or sort of going by the wayside, moving more towards electric cars, right? But look, in real estate, right, the main outside dynamic will be mortgage rates. And so if we look at historically, the mortgage rates, 16, 17, 18, 19, again, good years in real estate. I think we can all say that. People waiting for this crash, but it's still good years. The interest rate hovered above 3.5%, 4%, even 4.5%. In 2020, drastic decrease. As you can see, the lowest rates in I don't know how long. So people were able to get into homes at 2.5%, 3% interest rates. And now in 2021, what we've seen it go up some, right? But not drastically, and still way below those other numbers, those other years that were considered good years. All right. So look, those to me, those five main causes of an industry crash, I think are not present here in real estate. So my advice is still time to get into real estate. If you want to buy, now is the time to buy. If you want to sell, you can wait. But your appreciation over the next several years is not going to be as high as it has been the past 2 years. So you could probably cash out now at your highest, upgrade your housing situation, and buy in while you still can see appreciation. Or maybe you have too much house. Now you can buy in nicer neighborhood, a smaller house, higher price point, because now you have that money. Look, so many options. I think right now is still the time. If you're renting, still the time to try and get in, and to get in and buy. So hope this was good. If so, hey, subscribe. Let me know. Leave some comments. Tell me what you think. Do you agree with me? Do you not agree with me? Look, I have opinions. Everybody has an opinion. I like to base mine on facts. And I think I presented you some facts, and I hope it helps. Let me know. Peace.